On September 16th, 1992, the Bank of England lost $3.3 billion in a single day. The world called it Black Wednesday. Traders in London watched the pound collapse in real time. The bank's reserves, built over centuries, were drained in a matter of hours as the government tried and failed to defend its currency. By nightfall, the British Treasury was empty. The emotional impact was disbelief and humiliation, the pride of a financial empire, the pain of public failure, the shock of seeing a nation's wealth vanish in plain sight. But the story of national drain didn't start with a single bad bet on the currency markets. The roots go deeper, much deeper. For centuries, Britain's wealth had been built on extraction. The gold and diamonds of South Africa, the tea and opium of India, the sugar and slaves of the Caribbean. The emotional echo is haunting. The pride of empire, the pain of exploitation, the shock of realizing that fortunes made in distant colonies could disappear in a single day on Threadneedle Street. A single day revealed the true cost of hidden deals. The Bank of England's loss was not just a financial disaster. It was the latest chapter in a cycle of boom, plunder, and collapse. The emotional toll was national. The pride of a country that once ruled the world, the pain of seeing its power slip away, the shock of learning that the same patterns repeat from colonial plunder to modern corruption. How did a nation's wealth vanish in plain sight? The answer is in the way money, power, and secrecy have always been intertwined. Each move in one era triggers a reaction in the next. The Panic of 1929, the gold runs of the 1930s, the currency crises of the 1990s. Each time, leaders promised stability. Each time, the rules changed and the dominoes fell faster. But to see how the scandal was built, we need to go back to the first cracks in the system. In the 18th and 19th centuries, the sun never set on the British Empire. But it never rose on the fortunes drained from its colonies. In Bengal, the East India Company's agents collected taxes at gunpoint, shipping rice and opium to London while famine stalked the countryside. In the Caribbean, sugar plantations ran on the backs of enslaved Africans. Their labor converted into gold and silver for British banks. The emotional impact was pride and denial. The pride of a nation growing rich, the pain of millions left hungry, the shock of seeing prosperity built on suffering. The economic term resource extraction was not just a policy, it was a way of life. Raw materials, cotton, tea, rubber, diamonds, flowed from India, Africa, and the Caribbean to British factories. Finished goods flowed back, sold at a profit to the very people who produced the raw materials. The emotional echo was resentment, the pride of invention, the pain of exploitation, the shock of seeing local industries destroyed by imperial imports. Imperial finance was the hidden engine. Taxes collected in rupees, francs, or shillings were converted into pounds and invested in London's banks. The Bank of England's vaults swelled with colonial gold. The emotional toll was humiliation, the pride of ancient civilizations, the pain of seeing their wealth shipped away, the shock of realizing that the world's greatest fortunes began with a ledger and a whip. Britain's trade surplus was built on the system. The empire's balance of payments was always positive, on paper, but the real cost was paid in lost lives, lost futures, and lost sovereignty. The emotional impact was generational, the pride of empire, the pain of partition, the shock of seeing borders drawn and redrawn by distant hands. How did empires get rich while their colonies starved? Why did the world's greatest fortunes begin with a ledger and a whip? The answer is in the way power, money, and violence fused to create a system that could drain a nation for centuries. But the end of empire didn't end the drain, it just changed its disguise. After the Union Jack was lowered and the last colonial governor sailed home, the world's new nations celebrated their freedom. But the drain did not stop. It simply changed hands. In the palaces of Lagos, the ministries of Delhi, and the presidential suites of Caracas, a new elite took the reins. The emotional impact was hope and betrayal, the pride of independence, the pain of seeing old patterns return, the shock of learning that the nation's wealth was still vanishing, just through different doors. Corruption became the new empire. Politicians and generals siphoned billions from state coffers. Contracts for roads, dams, and oil fields were awarded to friends and family. The emotional echo was cynicism, the pride of progress, the pain of bribes, the shock of seeing schools and hospitals starved while luxury cars filled the capital's streets. The economic term capital flight became a daily reality. As soon as oil, copper, or cocoa money hit the treasury, it was wired to Swiss banks, London real estate, or Caribbean shell companies. The emotional toll was exhaustion, the pride of national resources, the pain of seeing them sold off, the shock of watching fortunes built on the backs of the poor disappear into offshore accounts. Kleptocracy, rule by thieves, became a lived experience. In Zaire, Mobutu Sese Seko amassed a personal fortune while his people starved. In the Philippines, Ferdinand Marcos and his cronies looted billions. In Nigeria, oil money vanished as quickly as it arrived. The emotional impact was anger, the pride of a nation's potential, the pain of lost opportunity, the shock of seeing leaders become looters. Illicit financial flows, money moved illegally across borders, outpaced foreign aid. The United Nations estimates that Africa alone lost more than $1 trillion to hidden transfers in the decades after independence. The emotional echo was despair, the pride of a continent, the pain of seeing its future mortgaged, the shock of realizing that the world's richest resources could not buy security or hope. How did the new rulers become the new looters? What happens when the nation's wealth is hidden in Swiss banks? The answer is in the way power, secrecy, and global finance fused to create a new kind of drain, one that was harder to see but just as deadly. But the biggest scandals were yet to come when the world's bankers joined the game. In the 1970s, the world's bankers found a new frontier, the newly independent nations of Africa, Asia, and Latin America. Flush with petrodollars from the oil boom, Wall Street and the City of London lent billions to governments eager to build highways, factories, and new capitals. The emotional impact was optimism and ambition, the pride of progress, the pain of dependency, the shock of seeing skyscrapers rise while slums grew in their shadow. The economic term, sovereign debt, became a global obsession. Loans were easy to get, collateral was often a nation's future exports, and the interest rates seemed manageable until they weren't. When the U.S. Federal Reserve hiked rates in the early 1980s, the cost of servicing debt soared. The emotional echo was panic, the pride of borrowed time, the pain of mounting bills, the shock of seeing a nation's budget swallowed by interest payments. Devaluation became the next chapter. As currencies collapsed, governments printed money to pay their debts. The value of savings evaporated. Imports became unaffordable. The emotional toll was humiliation, the pride of a national currency, the pain of seeing it become worthless, the shock of watching bread and fuel prices double overnight. The International Monetary Fund, IMF, arrived with rescue packages, bailouts tied to strict conditions. The term IMF conditionality became a household phrase. Cut subsidies, privatize state assets, open markets to foreign investors. The emotional impact was resentment, the pride of sovereignty, the pain of austerity, the shock of seeing hospitals close and teachers go unpaid while foreign creditors were made whole. Wall Street and the city profited from every turn. When loans were made, fees flowed. When defaults hit, vulture funds bought up distressed debt for pennies and sued for full payment. The emotional echo was anger, the pride of a nation's resources, the pain of seeing them auctioned off, the shock of realizing that every bailout came with a hidden bill. How did Wall Street and the city profit from a nation's pain? Why did every bailout come with a hidden bill? The answer is in the way global finance, policy, and power can turn a crisis into an opportunity for the few, and a burden for the many. But the most shocking drain was still to come when the system failed at home. On September 16, 1992, the world's financial markets watched as the British pound was pushed to the brink. The Bank of England, once the world's most trusted central bank, was fighting for its life. The emotional impact was disbelief and dread, the pride of a nation's currency, the pain of watching it collapse, the shock of seeing the world's oldest financial system humbled in a single day. The crisis began with a bet. George Soros, a Hungarian-born hedge fund manager, believed the pound was overvalued and that Britain could not defend its place in the European Exchange Rate Mechanism, ERM. He borrowed billions, sold pounds, and waited. The emotional echo was audacity, the pride of a contrarian, the pain of a government under siege, the shock of seeing a single trader take on a nation. The Bank of England responded with everything it had. Billions in reserves were spent buying pounds. Interest rates were hiked from 10% to 12%, then to 15% in a desperate attempt to attract buyers. The emotional toll was panic, the pride of a central bank's authority, the pain of watching it erode, the shock of seeing the market ignore every intervention. The economic term currency speculation became a household phrase. The world's media called it a war between the bank and the speculators. The emotional impact was humiliation, the pride of a nation's history, the pain of defeat, the shock of seeing the pound fall out of the ERM and lose a fifth of its value in hours. Central bank intervention had failed. The emotional echo was fear, the pride of a system built on confidence, the pain of seeing that confidence shattered, the shock of realizing that even the most powerful institutions could be outgunned by the market. Market confidence was gone. The government's credibility was in tatters. The emotional toll was anger, the pride of a nation, the pain of lost savings, the shock of seeing pensions and investments wiped out by a single day's trading. How did a single trader beat a nation's central bank? What happens when the world loses faith in a currency? The answer is in the way trust, leverage, and global capital flows can turn a policy error into a national disaster. The aftermath would change the rules of money and power forever. In the wake of Black Wednesday, Britain was a nation in shock. The emotional impact was humiliation and anger, the pride of a financial empire, the pain of public failure, the shock of seeing the pound, once the world's anchor, reduced to a cautionary tale. The government's response was swift and severe. Austerity became the new mantra. Public spending was slashed, taxes were raised. The emotional echo was resentment, the pride of fiscal discipline, the pain of lost services, the shock of seeing hospitals, schools, and pensions squeezed to pay for a single day's mistake. The Bank of England's credibility was shattered. Politicians promised regulatory reform. New rules were written for currency markets, central bank independence, and financial oversight. The emotional toll was skepticism, the pride of new safeguards, the pain of lost trust, the shock of realizing that the same institutions that failed to prevent disaster were now in charge of preventing the next one. The public's faith in the system was broken. Protests filled the streets. Newspapers ran stories of families losing homes, businesses closing, and retirees watching their savings evaporate. The emotional impact was exhaustion, the pride of resilience, the pain of lost opportunity, the shock of seeing the social contract rewritten by market forces. But the pattern of drain and scandal didn't end. It evolved. Hedge funds and investment banks found new ways to profit from volatility. Politicians, wary of another Black Wednesday, built up reserves and adopted new rules. The emotional echo was vigilance, the pride of learning from the past, the pain of knowing that every fix creates new risks, the shock of seeing the same cycle repeat in new forms. How did a nation pay for a single day's mistake? Why did the public lose faith in the system? The answer is in the way crisis, reform, and the hunger for stability can reshape the rules of money and the lives of millions. But the pattern of drain and scandal didn't end. It evolved for a new age. The story of national drain didn't end with the fall of empires or the collapse of currencies. It simply changed its disguise. The emotional impact is déjà vu, the pride of new independence, the pain of old patterns, the shock of seeing the same fortunes vanish, just through different channels. In the age of empire, wealth was extracted with armies and taxes. In the post-colonial world, it was siphoned by corrupt elites and hidden in Swiss banks. Today, the drain is digital, global, and harder to trace. The economic term neo-colonialism describes a world where multinational corporations, hedge funds, and global banks wield more power than many governments. The emotional echo is frustration, the pride of progress, the pain of seeing profits exported, the shock of realizing that the rules are still written elsewhere. Tax havens are the new imperial outposts. From the Cayman Islands to Luxembourg, trillions flow through shell companies and secret trusts. The world's richest individuals and corporations pay less tax than ever, while public services are cut and debts rise. The emotional toll is anger, the pride of innovation, the pain of inequality, the shock of seeing the world's wealthiest play by different rules. Financial opacity is the new normal. Complex derivatives, offshore accounts, and regulatory loopholes make it nearly impossible to follow the money. The emotional impact is suspicion, the pride of a sophisticated system, the pain of lost trust, the shock of learning that the next scandal may already be underway. Are today's offshore leaks just new versions of the old drain? What did past scandals teach about the dangers of hidden money? The answer is in the way every era's innovation is shadowed by the same old temptations: greed, secrecy, and the belief that this time is different. So what can you do as the next drain is engineered in silence? The untold scandal that drained a nation is more than a story of lost fortunes and failed policies. It is a warning, etched in the empty vaults of central banks, the shuttered factories of forgotten towns, and the memories of every family that watched their future slip away in a single crisis. The emotional echo is timeless. The pride of a nation at its peak, the pain of decline, the shock of waking up to new rules. Every cycle repeats. Power concentrates. Wealth is siphoned off, sometimes by foreign empires, sometimes by local elites, sometimes by the invisible hand of global finance. The panic of 1929, the collapse of 1992, the uncertainty of every modern crisis. Each time, leaders promise reform. Each time the rules change and the dominoes fall faster. The lesson is clear. Secrecy is the most expensive luxury of all. When money moves in the shadows, when the rules are written by those who benefit most, the cost is paid by everyone else. The dominoes always fall faster than anyone expects. The rules always change when it's too late to prepare. Will you be ready when the next fortune vanishes? Will you recognize the signals before the headlines hit? The answers are hidden in the past. If you know where to look, don't assume the rules of money and power are set in stone. Watch for the signals: rising debt, sudden deals, the quiet buildup of hidden risk. Pay attention to the canaries, offshore flows, new alliances, and the fine print in every contract. In every reset, someone is early, someone is late, and someone never even realizes a reset happened. Will you be ready when the next strain begins? Will you recognize the signals before the headlines hit? Subscribe for more cinematic economic history, and learn how to spot the next drain before it hits.